Hello and welcome to a special edition of Mutual Fund Sahi Hai presents Smart Nivesh, Sahi Nivesh, partnered by Times Network. Now, this campaign is dedicated to raising awareness about why mutual fund Sahi Hai. And today, we're diving deep into how mutual funds can be the right investment choice for the next generation of investors. Now, this episode is part of our exciting SIP Heroes series, where we bring in top industry experts to share their insights on different investment topics. Now, each episode will also feature a real-life story of an individual who has started their investment journey, showing you exactly how it's done. Now, our expert today is Swaroop Mohanty. He's the Vice Chairman and CEO of Mire Asset India. Swaroop, thank you so much for being here on this show today. So, Swaroop, let's start off. Now, my first question is, exciting time. People have moved out of college and gotten into jobs. They have money in hand. First hesitation होता है लोगों का कि I've just started earning. Let me at least spend. बात कल की कल सोचेंगे retirement, education or marriage is way off ahead. Why should I need to start investing today? What's your take?
Excitement होना भी चाहिए, जायज़ भी है that you waited all your life, studied so much to achieve something and you are starting a very meaningful journey, second phase of your life ऐसे मैं मानता हूँ. But normally वो phase में बहुत natural भी है कि आप अपने aspirations पहले fulfill करें rather than your goals. So people try to get into stuff which they more or less want, not what they need. But you know, ये अगर जब मैं शुरू कर रहा था कोई excuse नहीं दे रहा हूँ. ये बोलना जायज़ था क्योंकि इतना इन्फॉर्मेशन नहीं था. बट टुडे विद द काइंड ऑफ इंफॉर्मेशन दैट इज़ अराउंड एंड क्लियरली 2-3 थिंग्स विच आर वेरी इंपॉर्टेंट. आपका लाइफस्टाइल भी चेंज हो रहा है, उसके साथ आपका लाइफ स्पैन भी चेंज हो रहा है एंड ये सबको पता है. ये थोड़ा आप अगर ध्यान दें एंड निवेश वो टाइम में चालू करें तो लॉट कैन हैपन. मैं एक छोटा सा एग्जांपल देता हूँ कि अगर व्हेन आई स्टार्टेड माय जॉब अगर महीने में 500 रुपया इन्वेस्ट करता आज के डेट में फाइनेंशियली फ्री होता. क्योंकि वो नहीं किया एंड आई डिड माय एस्पिरेशंस. टुडे द प्रेशर ऑन मी टू इन्वेस्ट इज वेरी लार्ज.
So someone should not be disheartened by the fact that it's a small amount that they are investing. At least start, even if it's a small amount.
Two things. When you invest is when you have the money. And no money is small or big. Don't underestimate the power of 100 rupees in capital markets also.
Wow, that's very important. Because, Swaroop, you know, one concern that they also have is that they might have short-term goals also. Want to do a foreign vacation, want to buy an expensive phone. How can they use mutual funds for those kind of things also?
See, all goals are right because everybody's life is right. More important कि आप अपना नज़रिया पहचानें और आपका क्या इच्छा है लाइफ से वो पहचाने. एक बार वो आप लिख दें. म्यूचुअल फंड के तरफ से हर एक गोल के लिए प्रोडक्ट है, हर एक रिस्क कैटेगरी के लिए प्रोडक्ट है, हर एक टेन्योर के लिए प्रोडक्ट है. म्यूचुअल फंड क्या कहता है कि इट्स अ पूल ऑफ इन्वेस्टर्स शेयरिंग अ कॉमन फाइनेंशियल गोल. आप अपना फाइनेंशियल गोल एक फंड के साथ जब मिला देते हैं तब भी आपका निवेश अच्छा होता है. द यंग टुडे आर, करेक्ट मी इफ आई एम रॉन्ग, चेंजिंग एसेट्स टू एक्सपीरियंसेस. और आप जब कह रहे छुट्टी क्यों नहीं छुट्टी बनाए, मैं भुवनेश्वर से मुंबई आया टू सी द वर्ल्ड एंड आई फील माई बिगेस्ट इन्वेस्टमेंट हैज बीन माई ट्रैवल. तो फिक्सिंग अ गोल actually clears your investment journey in more ways than just returns.
And Swaroop, you know what happens next is once they also have this concern that should I be investing, where should I be investing? Because it is like, okay, let's say I will take X% of my salary aside, but what do I put it in? Because at some point of time, they might not have a goal that is quantified.
So my personal opinion is always quantify. Till you don't know why, you will not know where. Otherwise, if you don't know why you are investing, it will be a meaningless investment. It will not be tangible. It will not make a meaning to your own life. So always, and that's a learning we learned after a long time of investing. Earlier we were return chasers. Fine, be return chasers. Then define a return. I want 12%, I want 15%. Sometimes when you put that, you will know that with those returns come risk. See, one fundamental thing is when we start investing, we think it's a return generating business. As we mature, we realize that it's a risk mitigating business. The closer your investment is to your risk profile, and trust me, everybody's risk profile is correct.
Right.
But you have to match it. Then you will know according to your risk profile what is suitable, and you learn risk profile over a period of time. Nobody is born with a risk profile, right? So there are some simple virtues of investing, which one learns while taking that journey. But my humble request will be, always know why you are investing. Then, everything becomes simple, everything becomes a science.
And it becomes clear, and I guess, I think what worries people is when they see that number, but they don't realize that if I'm 25 today and if I'm retiring at 60, I have 35 years to build that number, which I'm guessing just makes it a little easier.
35 years, you can do wonders with that much of time, right? I mean, and you just add a little bit of knowledge on the power of compounding, what I call the rule of 72. Just put that in your life. It can change your life. With 35 years, a very long time in a country like India. Is a great time to be an investor in India. And that's you can actually change your life with that kind of time on your side. But everything changes if it reduces 34, it reduces 33.
Yes.
The opportunity cost of not investing then starts going up.
So the earlier you start is always better.
The other one is, of course, nowadays, people are investing through SIPs. While SIPs is talked about a lot, the SIP top-up is not talked about much. Since you asked for an example, I'll give you my pet example.
Yes.
Is 35,000 rupees SIP at 10% return. Topped up at 10% every year. Meaning you top it at 3,500 next year, then you top it at 10%.
Yes.
Actually becomes a crore in 10 years. So 35,000 a month, topped up by 10% every year at 10% return, which is doable in an economy like India, gives you a crore in 1 year, in 10 years. Simple maths, right? Once you start getting mathematical into your investments, and then the planning and your goal achievement and whatever you need can be done.
I think this top-up SIP is the most important factor that people sometimes overlook.
You cannot imagine the power just 10% top-up can add to your journey. You can enhance your journey by 2-3 years very easily.
Swarup, last question, just your leaving thoughts. What would you like to leave the viewers with?
So I'll be very honest. I started getting into a financial plan when I reached 40. Now there are enough tools online. You can come to any website of any fund house and do your own planning. Spend some time online in finding out how much money will reach where, at what return, with what inflation. Do that maths yourself. It is your money. It's a very simple process. The simpler and mathematical you can make it, the better it will be for you. The more emotional you make it, the worse it will be for you.
Very nice. So, but keep it simple, stick to the math, it will help sort things out. Thank you so much, Swarup, for being here today and for talking to us and our viewers about this very important topic on this special episode of Mutual Fund Sahi Hai presents Smart Nivesh, Sahi Nivesh, partnered by Times Network. It's time for a short break, but on the other side, we're going to meet a special individual who has actually started off on this journey of securing their financial future. So don't go anywhere. We'll be right back after this break. Welcome back to Mutual Fund Sahi Hai presents Smart Nivesh, Sahi Nivesh, partnered by Times Network. In this segment, I'm in conversation with a young professional and we'll find out about her investment journey, where she's been investing, how she's been managing her finances, and what are some of her key takeaways from the journey.
Hi, my name is Nirmal. I am 29 years old. And I've been investing in mutual funds for the last 8 years. This was the first time I moved away from home. I was in Chennai. So yeah, I did get pocket money from my parents. I would spend very less money, and I think the same continued after I started working as well.
So hi Nirmal, welcome to our show. Thank you so much for talking to us here today. So first up, tell me a little bit about yourself and your journey so far.
Sure. Hi Sumit. So I am 29 years old. I am born and brought up in Mumbai, but for the last 12 years I've been away from home for studies and for my job. I did my bachelor's in mechanical engineering. Currently I'm working with an e-commerce giant.
Super. So Nirmal, when I say the word money or investment, what comes to your mind? I don't see that very often these days, but I think investments are very important.
And I've seen my parents start investing when I was a kid, and they had a financial advisor and who helped them with their plans. And now I see them very relaxed with whatever goals they had. So for me, it's similar. I would want to invest early on and be relaxed in my future. But at the same time, I also believe in enjoying the present and not just invest.
So that fine balance, walk that
True,
thin line in
yeah.
the middle of that. Okay, then, so now let's talk about investments. So what are the kind of investments that you're currently doing? What are the components of your portfolio? And when did you start investing?
So I have been really lucky with the people that I've got in my life, and my financial advisor is one of them. I started investing around 8 years ago when I started with my job. I am investing since my second salary itself. First salary I kept as buffer. And so I wasn't earning very much then, but I have been investing regularly ever since then. I follow the SIP mode. And most of my investments are in mutual funds, but my financial advisor also believes in diversification of investments. So there are investments in gold, SGBs, and other sources.
That's great to know. But Nirmal, earlier you mentioned that you have a financial advisor. Now, of course, the financial advisor takes a certain amount of fee. So when people must be telling you that why do you need to pay fees, you can get this advice, or you can do it yourself. What's your take on that?
See, like I said, my parents have had the same financial advisor, and they started very late in their investment journey. Like me and my younger sister were already like in our teens when they started. But nevertheless, ever since they've had that financial advisor, I have seen them enjoy their present as well as be rest assured about the future as well. All their goals, whether it was buying a house, whether it was our education, whether it was the other goals that they had, marriage, etc. All of them were fulfilled on exactly the timelines they wanted it to be. So I don't think a financial advisor will give you the best returns that you may get. He'll just give you the peace of mind that you would want, and that I think is definitely something that you should hire him for. Yeah.
Fantastic. I mean, at the end of the day, you want that money and have
Yeah.
peace of mind with that. When we talk about the investments, your monthly SIPs in mutual funds and investments that you do every month, can you give me a ballpark figure as to the rough percentage of your salary that you're investing every month?
Sure. So when I started, it was close to around 50%, which then did not seem too much to me because I had just moved away from home as well, so there were other expenses as well. Now it's even lesser, it's around 25%, but I have an ongoing EMI now for my education loan, so which is why the percentage I've got now.
So you mentioned earlier in your conversation that your parents have saved up for your educational needs, but you've also said that you've taken an education loan. So can you tell us about that? What went into taking that decision of taking the loan instead of using the corpus?
Sure. So actually taking an education loan wasn't in the plan. We did not have that in plan. But again, like I said, my financial advisor, he does not only guide me on, where to invest, what to invest, but also on other decisions pertaining to money or even life sometimes. So this was one such decision where we were getting a good rate of return because I was getting into a Premier B school. We were getting a good rate of return much lower than the market rates. And it made sense at that point to take an education loan instead of
using the corpus that we had. Interesting. I'd now like to know a little bit about your portfolio. What are the kind of mutual funds that you've invested in?
It's a diversified portfolio. It's multiple mutual funds that I'm investing in. Some are low risk, but most of them are high risk because at this point I think I'm okay with taking risk with my money. Most of them are higher equity, long-term investments that I'm doing. It's already been 8 years investing, so I do see some of them growing. Some of them I think are still yet to mature.
Okay, that's great to know. But when you talk about the SIPs that you're doing every month, are you earmarking them for any specific goals, or is it just like, let me just save now and then in the future we'll figure out what that money can be used for?
I think it's the latter. As of now, I do not have a specific goal, or even if I have specific goals, I do not have specific timelines for those. So right now I'm flexible. I'm not investing with a particular goal in mind, but it's mostly for the rainy day now.
Now, Nirmal, I'd like you to share your key takeaways from your investment journey over these past years, your experiences, any learnings that you have. If you could share that with our viewers.
There are like a lot of learnings in this process in the last few years that I have been investing. And number one is that I have realized, my parents told me about it previously, but I never took it that seriously. But investing early is definitely important. The earlier you start, the more benefits you will see, because after a point when you see your money growing in itself and your money growing more money, that is when you will realize that, okay, investing back then made sense. So yeah, number one learning is investing early, definitely. Second is consistency. There have been months, I will not lie, there have been months where I have struggled with the leftover money that I have after the SIP goes away. But the consistently, the money going away from my bank every month, it kind of gets me into that discipline that, okay, with whatever money you have to manage. And you cannot falter on that one thing, and you cannot take excuses to say that is mahine nahi karti hu, next mahine I will do it. And procrastination is also kind of avoided by that. So consistency and discipline is another. And lastly, like I said, wealth is what you don't see. So that is something that I've learned.
But Nirmal, when you talk about a financial plan and the financial portfolio, it's also very important to review it regularly. So how often do you sit with your financial planner, with your financial advisor to review the portfolio, review the decisions that are being taken?
As a part of the process, we do it every quarter, because I'm not in the same city as he is. But if there is anything urgent, or if there is anything that I want to know, if I have doubts specifically, then I schedule a Zoom call with him as well.
Nirmal, earlier you mentioned that when you started investing, almost about maybe 50% of your salary you were investing. Of course, that time the overall salary amount was smaller, and over the years, of course, your salary has increased, and therefore the percentage has gone down. But in a whole number, have you been regularly increasing the amount of your SIP over the years?
Yeah, for sure. Like, I try to maintain the percentage after my EMI has gone away. After my salary increased, after my MBA, definitely I did increase my investments. In fact, the initial 1 year, I also had a bonus coming in. So I think I was investing my max. Then when the bonus went away, I got it back to the normal.
That's great. Actually, Nirmal, that's actually a term called step-up SIP. What that means is that at regular intervals, and usually people do it like when you get an increment in your salary. So at those regular intervals, as your salary increases, you also increase the investment, because as the more and more that you invest, of course, with the power of compounding, the portfolio, the corpus grows. So that's actually called a step-up SIP, and it's great to hear that you're doing that. Nirmal, one other term that's very famous nowadays is FIRE, which is financially independent, retire early. So do you see yourself in maybe a decade and a half being there and wanting to retire early, being financially independent?
I don't intend to retire early for sure, but definitely financially independent. Like I said, I'm investing for the May Day now. So I don't have any specific goals that I want to retire early, or that I want to, get done with work after I have so much money. But my only aim is that once I do have my goals in place, or once I do not have the flexibility on those goals, I think I have the money available with me to take care of those goals.
Super. Nirmal, thank you so much. It was an absolute pleasure talking to you and hearing your story. Ladies and gentlemen, that's all on this very special episode of Mutual Fund Sahi Hai presents Smart Nivesh, Sahi Nivesh, partnered by Times Network. I hope you're taking back some very important key takeaways from the episode today. Thank you so much for watching.